Hi, everybody. Welcome to the Parallel Systems broadcast live stream. I'm your host, Mike. And on tonight's show, we're going to be asking the question, do they want the gold price to go higher? Is that why we have seen gold break out this year? 50% year to date, 8 consecutive weeks of the price relentlessly going higher. Not really any correction. We just had a bit of a sideways consolidation. Then it broke out again, and it shows no signs of stopping. So the question then becomes, is this what they want? Is this what they are actively seeking? Now, you might be asking, who are they? Maybe you want the price to go higher. Maybe your friend Dave wants the price to go higher. But does the US, does Europe, does the Chinese, do the Chinese want the gold price to go higher? Well, that's the question we're going to be asking in tonight's episode. And this one came to me this morning when my friend from Doug Casey's Take, Matt Smith, sent me a message, and he was theorizing that maybe they're using gold right now as a sort of debt sponge to mop up the excess liquidity and really to restructure the debt by having the gold price go high enough that they can start to trim off portions of the massive sovereign debt overhangs. And he asked me my thoughts on it, and I immediately started to think of some of my past ideas and articles that I wrote. And I thought, I'm going to send some of these over to Matt so that he can look through them, because Matt's very smart. And if you're not a subscriber of Doug Casey's Take, you absolutely should be. Go check it out. It's my favorite show. And I thought if I give Matt these articles, I know he'll come up with even greater ideas from them, and we can bounce ideas off each other. But in the end, I realized, there's so many articles and shows that I've done on this, all kind of little pieces of the jigsaw, that I'm just going to make a new article and put them all together. So that's what we're going to be basing tonight's episode off. And my article is over on Substack. It's called The Silent Pact: Gold's Role as the Ultimate Liquidity Sponge. And the subheading is, have they agreed to take the brakes off of gold to stabilize the system? ? And, this is a really useful article for anyone new to my content who wants to learn about the financial reset, because it links through to lots of my past articles going back a number of years, newsletters, all different parts of this whole idea and narrative about a financial reset and a revaluation. And by the time you've gone through 5 or 6 of these articles, you'll definitely have a wealth of knowledge to help you navigate what's coming next. There's also links to articles by Jan Nieuwenhuis, Matt Smith, of course. So definitely one worth checking out. But we're going to be discussing some of the content in that article tonight, and I'll be adding to it, and you can go away and read it in your own time. So the question, like I said, is, are they actually using gold now as a means to try and reset the system? Now, granted, we've been saying for a long time the reset will be versus gold, and I've discussed why they would be forced to go back to gold. But this is something different. What we're actually asking is, are they kind of furnishing this now? Do they want this to be happening? Is this something that they're allowing? Because remember, for much of history, we had a war on gold. That was a war on the perception of gold. So the media was being used to turn people off gold. And you'll know I did a recent video talking about that. We'll come back to that in a second. There was also war on gold in terms of its price. So they were suppressing the price. Anyone that says they don't suppress the price or didn't suppress the price has no idea what they're talking about. We all know they suppressed the price. This went all the way back to the 1960s with the London gold pool, or you could take it back to the 1934 revaluation of gold, where they pegged the price. I mean, that's price suppression par excellence, just pegged the price for 30 years. So they've always controlled the price because, of course, in a fiat paradigm, you have to control the price of gold, because the price of gold breaking out is really the death knell to the current system. So that the price of gold is now breaking out raises some questions. Why is this happening? Is it that they can no longer control the price of gold, or is it that they are actually allowing it? Now, I think the answer is quite nuanced. I think it's both. Of course, they can't control the price of gold anymore because there's so much liquidity going into it, and it's rushing out of where? It's rushing out of traditional financial assets. And I always show Exeter's pyramid. And what I show when I put that graphic on is that there's quadrillions of dollars hypothetically out there. There's all these derivatives and notional value that exists, but of course it's not backed by anything. And what we start to see going into the end game is all of this leaks down. It starts out as a trickle, then it becomes a flowing tide, and then all of a sudden it's like a reservoir breaking, and it all tries to rush into what is essentially a tiny little market of gold. 400 $400 billion worth at $3,500 per ounce annually. Most of that's already accounted for with central bank buying and industry. So actually, it's only around $100 billion each year. Now, compare that to, say, US Treasuries when you have $1 trillion worth trading daily. Yeah, you can see that it doesn't take much to go into gold to cause this massive upward rise in price. Then, of course, we've got de-dollarization. That's a long-term trend. China's now got 40,000 tons, Russia 10,000 tons. Again, we'll come back to that in a moment because it's a key part of the narrative. But there's lots and lots of nations that are following suit. India this summer, they sold a lot of treasuries down to buy gold. So there's lots of trends, structural trends in play that mean the gold price has to rise. And that's what we're seeing. So in essence, yes, they cannot stop the rise in gold price. But we also know that this year, the US announced that they are going to weaken the dollar intentionally. So we know that they are actually seeking a higher gold price because by weakening the dollar, devaluing it, what are you devaluing it against? It's always gold. It was against other currencies too, but it's against gold as well. So when Scott Bessent and Donald Trump came out in February and said, we are going to weaken the dollar. We actively want a weaker dollar. And they said it was for trade purposes and to make it cheaper to produce at home. However, it also was implicitly telling you they want a higher gold price. Now, Matt Smith did a fantastic interview with Mike Farris of the Coffee and a Mike podcast back in February where he was discussing this. And he said, what I also thought was the message, which is the gold price is going to have to go up. If you want a weaker dollar, then you want a higher gold price as well. Now, that's precisely what's happened. We've seen the gold price, of course, go up 50% this year, shows no signs of stopping. And so the first thing I would say is, yes, the US did actively want a higher gold price this year. Now, you might be thinking, well, why would they want a higher gold price? Surely that is the death of the dollar. If the gold price breaks out, the dollar is no longer the global reserve because everyone's going to rush into the dollar. It's rush into gold. It's already the second most held reserve asset. And with the price going up, before too long, it's going to overtake the dollar in terms of the dollar value of reserve holdings, which means it'll be the number one within a few years, maybe this year even. So that's happening very fast. And of course, it will be the end of the dollar. But I think the US knows that the dollar is done anyways. After the confiscation of Russian reserves, it really was the straw that broke the camel's back. After that point, whoever wasn't suspect of the US dollar and treasuries all of a sudden was. Then, of course, we had Stephen Moran's paper talking about trading other people's treasuries for long bonds, which were going to have zero yield, essentially defaulting on the treasury holdings that other nations had. He released that back in November last year, I think. So the US has already played its hand and it's overplayed it too. So naturally, nations are rushing into gold. So the US knows this. The US knows it has no other choice now but to accept that the dollar is being dethroned. And if it wants to retain hegemony, it has to do it another way. Now, that's very scary because the US really has retained hegemony mostly through the dollar. Of course, it's got a very strong military. But that military was mainly used against, let's face it, brown and black people in other nations. Now, if you take away the dollar and the US wants to control other nations, how's it going to do that? Well, it's going to do it through the military. It's the only card it's got to play is military and geopolitics, which is why we're seeing trade wars, conflict, cyber warfare, economic warfare, all of these things combined. But the kinetic side of things, I think that's going to have to be much larger than it used to be. And maybe that's why we're seeing lots of moves made in the Middle East. We've got proxy wars with Russia. And eventually, of course, all roads lead to China. Now, let's speak about China for a second. They've got 40,000 tons of gold, at least. We know this. So they've been setting up for the dollar endgame for a long time. But what people don't often comment on is that the gold reserves of China is also a weapon. It's an implicit weapon for the US. And really, it's sped up the dollar decline massively. It's not just de-dollarization that speeds up the dollar's decline. It's China's amassing of massive amounts of gold. Now, why is that? Well, because China is the heir apparent to the US. They are the largest exporter on planet Earth. everyone's dependent on China, including the US, for all kinds of goods, commodities, basically for funding our lifestyles because our salaries in the West have been absolutely destroyed because of the massive amounts of credit and debt expansion that we've seen, the money supply expansion. So, really, without China, we would have collapsed a long time ago, and the US would have too. No one would have been buying their treasuries. So, in that essence, yes, China's treasury holding de-dollarization is important, but also, when you've got a massive amount of gold and you're the biggest exporter on planet Earth and you start to move away from the dollar, it's not going to take long before the dollar has to collapse anyways, because what you're going to see is China enter into agreements with other nations settling for gold. And that was precisely what happened. We had the BRICS Plus monetary system start to be created with Russia, which is going to be ostensibly a gold-backed system. And so when the Chinese got to a certain level of holdings where they are now 40,000 tons, look at it this way. As the US continually debases the dollar, which is an absolute mathematical certainty because it's a Ponzi scheme, so you've got to keep adding more debt to the system just to repay the interest on the old debt. And that's why the US is paying interest now that's larger than the full defense budget. And they've got defense, or should I say offense, at 10 times. Well, it's not 10 times, it's the collective amount of the top 10 nations. It's more than that. After the US. So it's a huge budget and they're paying more in interest now, or they're getting very close to paying more. So when the US is forced to continuously debase the dollar, of course, the gold price has to go up. Now, as the gold price goes up, what does that do to a nation with 40,000 tons? It gives them massive amounts of unrealized gains on gold. And with China, for every $100 increase in the gold price, it gives China $90 billion of unrealized gains. So this year, with the gold price going up 50% in a single year, it's given China $1 trillion, $1 trillion in just the space of 8 or 9 months in unrealized gains. So that is a huge threat to the US. And I called it like a Chinese finger trap. You know those things where you stick your finger in and you try to pull it out, but it just gets tighter? And that's because every time the USD values the dollar, it increases the value of China's gold holdings. So the US is stuck now. So that's another reason why the US has no choice. It has no choice but to accept that the dollar's day is done. And so going into this year, I think the US did what it had to do. And I don't think it wanted to do this. I just think it had to do this. And the US did this by basically embracing a weaker dollar. Now, to counteract the loss of authority that the dollar declining will have in terms of impact on the US, they enacted a global trade war. And they've used this trade war to try and reorganize the chessboard so they still come out on top and they still have a lot of dependency upon them. The blowing up of Nord Stream, energy dependency, for example, because without the US dollar being everybody else's liability, well, the US loses a lot of say in the world. But if the US can leverage people in other ways, well, maybe it can make up for the loss of the US dollar and the exorbitant privilege that it gives them. So that's where the trade war comes in. And we did see 2,000 tons of gold fly its way to the US earlier this year. And I speculated in my newsletter, again over on Substack, for my members and on Patreon too. For those that don't know, it's the same membership, essentially. You can go to Patreon or Substack. And I speculated that this wasn't just because of the trade war or tariff threats. In fact, I thought that was a smokescreen narrative. I think a lot of that gold was actually genuinely going to the US because they were setting up for the end game where they was going to allow gold to go up really fast. And they was going to do this because, of course, all nations have massive debt overhangs. And if you're going to deal with that, and you have to deal with that because you owe it to somebody, you owe it to some bankers somewhere off there in the distance. We know how these people work. It's not the debt of the US in terms of they can just erase their own debt. No, they owe it to somebody else. So I speculated that we was going to start to see that upwards revaluation of gold, which I called the phase one revaluation. And the phase one revaluation is something that happens all the way up until the very end point of the current system. I call it the relentless revaluation of gold. And it has to happen because going into the end game, you don't debase the currency less, you debase it more. And as you debase it more, the price of gold goes up faster and faster and it steepens. And look at any chart, look at the Weimar hyperinflation chart, look at gold in any currency that's hyperinflated. And that's what you're seeing. Now, I'm not saying we're in a hyperinflation now, but we're in the rapid escalation of currency debasement phase. And it's going to get quicker and quicker and quicker. Naturally, the gold price goes up and up. Now, simultaneously, what you see during that part of the revaluation in phase one is the devaluation of everything else versus gold. So it's not just gold going up nominally. Gold starts to buy you more property. It starts to buy you more stocks. It starts to buy you more asset classes like land, for example, or forestry. All the asset classes start to devalue versus gold. And the reason for that is because what you see is a massive influx of people going into gold way beyond the inflation rate. That's where we are now. That's where we are now. Now, that goes all the way up until the collapse of the existing system. And then you have the second system come to light. Now, the second system doesn't happen immediately. It happens after a period of great conflict, which kind of overlaps the collapse of old system and phase one revaluation, and then bleeds out into maybe this kind of no man's land. Now, we saw this during World War II. World War II, when did the Bretton Woods Conference occur? It occurred just before the end of World War II. So 1944 was the conference. And that was where it was decided that the US now had all the gold, so they made all the rules. Then we got the Bretton Woods system. And the Bretton Woods system was where the US would look after the gold for everyone else, and everyone else would hold treasuries, which were redeemable in theory for gold. Now, when people started trying to redeem that a few decades later, what happened? They slammed shut the gold window and they were forced to abandon the Bretton Woods system. And that's when we saw the gold price really start to rise. And it went to around $850 per ounce, inflation adjusted. In 1980, that was around $35,000 per ounce. And the reason that happened is because lots of nations, namely non-US nations, started to rush into gold because they understood that the US dollar was junk, it was trash, and they didn't want to backstop their their economies and their financial lives with it anymore. They wanted to go to gold. Now, the US pulled a rabbit out of a hat. They didn't stop. They didn't get rid of the gold for just any reason. They had to get rid of it because the US went to the petrodollar. And the petrodollar forced nations to sell back that gold into the market, which collapsed the price. And after that, they had to go into US treasuries again so they could buy commodities and pay for oil. It was a masterstroke. But this time, there will be no masterstroke. The US is done for. We can see that. The de-dollarization is structural, it's long-term. And we are seeing, of course, lots of nations rush into gold. And we're also seeing now institutional investors leave sovereign debt, not just the US. They're not going out of US debt into the yen or into the euro or the pound, God forbid. No, they're going into gold. So it's too late. So the relentless rise of gold phase one has to happen. And so what the US has said is, well, we're going to have to embrace this. Why not embrace it and use it to our advantage where we can? And that's why I think this was done almost in an orderly fashion with the US importing 2,000 tons. So they've got a massive uplift this year in their gold holdings value. So has China. And China, of course, this was always their strategy. They're going to be very happy because, they've got a collapsing economy over there. The housing bubble burst and it's left many people, Mr. Win and Mrs. Chow, they're bankrupt over there. They bought all this shitty property, these ghost flats that don't exist. Now they're haunted by the ghost of Grandma Wu. No, it's not good over there. But the Chinese have always pushed gold on their citizens. Well, I say always. From 2010 onwards, they started to publicly advertise gold in the media and say, you should buy it, it's really good for you. So lots of Chinese citizens have bulked up their reserves of gold themselves, and they're seeing huge uplifts. So that's going to start to fix some of the problems over there. In the US, okay, the US has got a dire fiscal situation, but through Trump and Besant, they are trying really to leverage the rest of the world into giving the US what it needs ready for the collapse. I think it's going to be kind of like a Soviet situation. The US will look really bad. It'll be like Soviet Russia, but in Soviet Russia, you had levels of bad. There was Russia itself, they were actually the best of the bad bunch. Then you had all of the other countries, Czech Republic, Hungary, Romania, Poland, all those countries looked even worse. That's kind of what it's going to look like for all of the auxiliary nations, the allies of the US. And so many people in the US will still, I mean, the oligarchs and the kind of richest upper class, they'll be fine, especially the ones with gold. But for most people, it will be pretty tragic. Now, what about Europe? Well, Europe for a long time has been accumulating gold, and I did a lot of research, and I discussed this in my article. And it's not just me; there was other people who did this research. But I discussed how Europe has essentially been trying to equalize their gold holdings at 4% of GDP. And I actually did a video on this one where I showed that most European nations in Eastern Europe are scrambling to get to 4% of GDP. Now, this isn't about tonnage. It's not about everyone having 1,000 tons of gold. It's about the size of your economy and getting 4% of that economy into gold in terms of your holdings. Now, Poland's achieved this. The Czech Republic, I think, have now achieved it. Hungary are close to it. Now, the reason they're doing this is because they're going to revalue gold. They know that. This is like the 1970s all over again. All the central banks behind the scenes are saying, it looks like we're going back to gold, boys, so you better bulk up your holdings, because when that revaluation comes, whether it's because of the relentless revaluation in phase one that we're living through right now, or whether it's because of the second revaluation, phase number 2, where they have a Bretton Woods conference and they all sit down and they decide who's going to run the system, what currencies will exist, and what the value of gold will be vis-a-vis other assets, because what really happens is all the other assets devalue dramatically versus gold in the new currencies. So things will collapse 95% perhaps versus gold. So your gold might buy you 10 times more property, or, the Dow to gold ratio will go under 1. These are all historic cycles too, by the way. This isn't just me making it up. You can go back and look at the charts. And what we're living through is the end of a debt super cycle. So anything you've seen historically is likely to be overshot massively because it's a huge reset. But in any case, the European central banks have already discussed this. And, I write about this in the article, so I'm not going to go into it too much. But I shared a quote that Jan Nieuwenhuis, I think you pronounce his name. He said that in 2003 that he found a comment from Arend Heuben of the Dutch National Bank. And Jan reported this. He was the first to report it. And Arend Heuben said the following: in a recent interview, the Dutch central bank shared that it had equalized its gold reserves relative to GDP with other countries in the Eurozone and beyond. This was a political decision. If a financial crisis occurs, the gold price will skyrocket, and official gold reserves can be used to underpin a new gold standard. These statements confirm what I've been writing about for years. This is Jan's voice now, about central banks preparing for a new international gold standard. Now, that was astonishing, because that was somebody working for a central bank admitting that behind the scenes, they're preparing for a financial reset versus gold. Now, fast forward to 2024, and I found a comment from somebody who worked for the Polish National Bank, pretty much confirming exactly what Jan had found with the Dutch National Bank. So now listen to this. This was by a man called Konrad Raczkowski, and it appeared in the central bank's own publication, meaning it was vetted internally, and that signaled its credibility. And like Jan's finding, it was buried in a native language publication. So these were not things that were meant to be heard by the international community. It's only because Jan is Dutch himself that he was able to find those comments. It was on a podcast actually in Dutch. And this one was in a publication that was in Polish, but I found it and it said the following. As recently as 2017, Polish gold reserves amounted to only 100 tons, accounting for only 1% of GDP. Today, it is more than 3% of GDP. The National Bank of Poland has made reasonable decisions to significantly increase gold reserves. In the future, with favorable market conditions, it should buy another 120 metric tons of gold. Now, here's the important part. Listen closely. Such a level would correspond to the value of reserve assets of this bullion as 4% of GDP, a level analogous to that of the Eurozone. This appears to be the new gold standard for the entire Eurozone in the near future. These reserves will have to be matched to the size of the economy. Again, that was a bombshell disclosure because it was another central bank openly confirming what I'd long since suspected, that there's going to be a reset versus gold. And the reason they was equalizing their gold holdings to 4% of GDP was so that when the revaluation happens, everybody feels the benefits equally based on their GDP. So it would be a fair uplift. So, okay, what am I getting at? Well, we know that the Europeans behind the scenes were talking about a gold revaluation and preparing themselves for it. Most of those nations now have already hit 4% of GDP. Anything else is a bonus. We also know that some of the most bankrupt nations in Europe, let's say Italy and France and Germany, they've already got thousands of tons of gold. So if we see a gold revaluation, let's say gold goes to $40,000 per ounce. At $40,000 per ounce, any nation, doesn't matter whether it's one of the big ones or the small ones, any nation with gold reserves at 4% of GDP will be able to wipe out 100% of their debt. Just think about that for a second. At 4% of GDP, if we get to $40,000 per ounce, they can wipe the debt clean. They'll have over 100% gold to debt coverage. Now, maybe they don't need to go that far. Maybe they only need to get to 50% gold to debt coverage, in which case you go to $20,000 per ounce. Now, does that sound absurd that they might actually want to do that, that they might actually want to stabilize the system, or in some case, you could say reset the system, but in an orderly fashion using gold? I don't think it does, because they don't want to lose credibility and they also don't want to lose control. Now, this could be a conspiracy. You might say this sounds crazy, but they've already discussed it. And if you go to my article, you'll see that. And so we know that's what they're planning to do. China, of course, they want the gold price to go up because every time the gold price goes up, they get richer. Their Forex reserves are the largest in the world, but they don't need them. They can do away with their Forex reserves. All the fiat currencies could die tomorrow, and China can reset at a higher level than anyone else in the world because they've got 40,000 tons. Russia have probably more tonnage than the US. So you can see why Russia's such a threat. A complete commodity profile as well. All of that gold, that's pretty scary stuff. So the US is forced now to react. It's forced to respond. It can't sit on its hands any longer and keep allowing that dynamic to play out. It has to be offensive or step aside. And I don't think they're going to step aside. So are you surprised that this year we got Scott Bessent and Donald Trump, and all of a sudden the entire global trading system is being rewired and they're forcing other nations to decouple from China? The conflict between East and West is escalating fast. We're seeing conflict in the Middle East as they set up to maybe take on Iran, which we know was on the agenda for a long time. I'm not surprised. And that the US has also said, you know what, we're going to embrace a weaker dollar now. We are flipping the complete opposite direction. We're going to have a weaker dollar. But before we do that, let's bring across 2,000 tons. And of course, a weaker dollar just means a higher gold price. So this takes us back to our original question. Do they want a higher gold price? I think the answer is yes. Now, we can only speculate as to whether they actually have agreed behind the scenes across all three frontiers, China, Europe and the US, the three largest economies in the world. Have they all agreed that this year they're going to open the floodgates and allow that gold price to go up higher and higher and higher? I don't know. I think Europe and the US potentially, China maybe, but it was going to happen for China anyways. They've already been setting up for this. So I think probably I would say the Western nations behind the scenes have agreed, kind of like a Plaza Accord, but a secret Plaza Accord. And the US, of course, is still going to come out in front because they're using the trade war to get concessions and commodities and rare earths and all the stuff they need. So the US is going to use it to their advantage to make sure they don't lose too much standing. And maybe they come out of it smelling of roses for a little while, but I think ultimately the debt collapse will take down the US many, many levels from where they are now. But whilst they can still print the dollar and they can still fund the military, we don't know. They could try and take on China. And that's maybe what they're going to do with this last little bit of the current system before it fully implodes. They're going to try and leverage that to take out China. We don't know. We can only watch this space. But one thing I would say is the gold price going up is also indicative of that rising global conflict, which I don't expect to stop. I think it's going to escalate. If you look back at any period in history where the monetary system starts to collapse, and it's happened many times, the changeover of the global reserve happens every 100 years or so. So the US is due to lose their prominence, and we're living through it. It's happening. But that period is always chaotic. The last time we had World War One, World War Two, the Great Depression, the Spanish flu, the stock market collapse of 1929, which led to the bubble bursting and it going nowhere for 24 years. Yeah, all of that's happening and we're living through it. Now, the other thing that I wanted to say is what's the financial media's role? Because in my last video, I spoke about how they don't want you to buy gold. And I stand by that. They don't want you to buy gold. China does. China's telling its citizens to buy gold. Central European nations, too. They're telling their citizens to buy gold, but not in places like the US, not in places like Great Britain or Canada or Australia. And the financial media, their role in this, in my opinion, is they sort of act like an accelerator pedal. And that's because they want to set people up psychologically for the reset. And that's why I think we're now finally seeing articles on financial resets. And gold is hitting the headlines. We are seeing gold in the media. It's not like there's no articles on gold, but I've noticed a pattern, and it's that the media seem to oscillate between cautious praise of the gold price going up and then suddenly flipping back to derision. So on the one hand, they'll say, oh, this is great, gold's going up. This is a sign of the strength of gold. And then the next day they're mocking gold bugs again. And they're saying, oh, gold's it's FOMO. It's a stupid pet rock. And I think the media are really like a narrative throttle. So they can be an accelerator pedal for public sentiment, but then they can also dial it down. And I think the reason they're doing this is they don't want the public to rush into gold. If that happens, the orderly reset that I think they're secretly doing behind the scenes would suddenly appear overnight. If if citizens put 4% of their wealth into gold overnight, it's over. The whole system would collapse because, of course, they'd be liquidating debt-based assets, which in a Ponzi scheme would collapse the whole structure. So the media is trying to stop people doing that. And I think that's why they've created Bitcoin too. It's really as a liquidity sponge for your money. They want you to go into the digital assets. That's why Donald Trump's pumping it. That's why the US is embracing it. BlackRock, oh, all the bad guys now love it. Please buy Bitcoin. So I think that is what that's there for. It's to push you into that. And if too many people start to get panicked about the current financial system, now they've got a new place to run to, which is Bitcoin. That's where the propaganda sends people to, is into Bitcoin. So that's what I think it's there for. And of course, it's a trap. It's going to be collapsed in the end game. And the gold part of it, yeah, they do want people somewhat. They need to manage the narrative, of course, because the gold price is going up. So I think that's what the media does. It manages the narrative, but it always tries to dampen appetite for it. Tells people it's a pet rock, it's not really that great of an investment. Go here instead. And that's important because if they do want the gold price to go up, how do you manage both at the same time? Well, firstly, you need a diversion, Bitcoin, and then you also need to manage perceptions, which is what the media is doing. So these are my ideas paired with other people's ideas. Like I said, you can check out Matt Smith's fantastic interview on the Coffee and a Mic podcast. This was back in February, and he laid out a lot of the ideas that he had. I've laid out mine in this article, which you can check out. And, I'm not saying that we are 100% right. All we're trying to do is connect the dots, and I try and link up with smart people because I want to hear their take as well. And I'd love to hear in the comment section what you think about these ideas. But it does seem to me like they've taken the brakes off now. And if they are saying they want a weaker dollar, they are telling you they want a higher gold price. And if they want to deal with the debt, they need the gold price to go much, much higher than where it is now. So if you think $4,000 seems high, I'm here to tell you, if they're going to deal with all of the sins of the old system, and they can't deal with all of them, there's quadrillions in derivatives, so it's going to be catastrophic no matter what. But if they want to try and get the train on the track after it's crashed into the brick wall, if they want to do some remedial work on that train, they're going to need a much, much higher gold price. So it makes sense to me going into the end game. That is precisely what we'd see, and they would start to take off the limiters. And remember the structural reasons why it would go up anyways. But if they all want it to go up as well, China, Europe, and the US, wow, it could go up really, really fast. And that's what we should expect to see. And lo and behold, 50% in a single year. I expect this to continue if I am correct. So please let me know in the comment section what you think of these ideas. Do you think they want the price to go up, but they don't want the plebs to own it? They want those plebs in those shitty shit coins. I think that's the narrative. Let me know in the comment section. Also, please do go across to my Substack if you enjoy it. Consider becoming a member, and you will be well ahead of the curve on these narratives. I've been talking about them for years, and so I will continue to do so. In closing, my friends, take care of yourselves. Thank you for listening, and I'll see you in the next one.